Welcome back, everyone, and thank you for joining us for another Prime Capital Financial Market Breakdown. I'm your host, Tara McBride, Chief Marketing Officer at Prime Capital Financial. Today, we're taking a bite out of one of the world's largest companies, Apple. Once the undisputed heavyweight champ of Wall Street, Apple seems to have tumbled from its throne, dropping 16% year to date and slipping to the number 3 spot in global market cap. So what's bruising this big Apple? Is it an innovation stall, AI missteps, or just the natural ebb and flow of an iconic brand aging out of its growth spurt? Joining me are two of the smartest guys I know who never make me feel dumb, Portfolio Manager Clayton Allison and Deputy Chief Investment Officer Will McGuff. We're unpacking what's going on under the hood, how Apple is attempting to regain its footing, and most importantly, whether investors should hang on or turn their appetites to something else. And if this episode leaves you wondering how Apple or any single stock fits into your broader financial picture, don't wonder alone. If you're already a client, you know you can reach out to your advisor anytime for an in-depth discussion. If you are not yet a client and you are in need of sage financial guidance, scan the QR code on your screen or click the link in the show description to connect with our team for a free, no obligation second opinion on your portfolio. Because we could all use a little more confidence in our financial decisions. Let's get into it. As I mentioned, Apple has fallen from the world's largest company at the start of the year to now gripping to the number 3 spot with shares down 16% year to date. Clayton, I thought Apple was some sort of impenetrable force. So what's been the cause of the decline this year?
Yeah, great question, Tara, and thanks for having us on as always. And that might be the highest praise Will and I have ever gotten in your intro, so appreciate that. You mentioned, obviously, Apple has fallen from number 1 to start the year to number 3. We have a chart that we're going to flash up here on the screen. And you can see right here that they didn't exactly have the most insurmountable lead on NVIDIA coming into the year. They were only about 15% larger than NVIDIA at that time. I know we're talking in trillions of dollars. So, I mean, every little bit counts. But right now you can see that they've even started trailing behind Microsoft now at the number 3 spot. To your question as to like why they've fallen 16%, I think it's a combination of a variety of factors. Obviously, it could be any manner of which, from trade policy and the tariffs, since they, detrimentally impact their supply chain with their manufacturing being primarily in China. So they're trying to figure out that. But really, the ongoing theme of this year, and really what we've seen over the last 2 years, it's all the AI trend. And that's kind of why you're starting to see NVIDIA take over as the number 1 company in the world right now, or at least the largest company, crossing over the $4 trillion mark. Because Apple has continually kind of lagged behind when it comes to their new AI strategy, and investors are looking for that innovation when it comes to AI. So it's buzzword, buzzword, buzzword. But as Apple stumbles in this kind of arena, their position in the overall marketplace starts to dip a little bit.
Microsoft beating Apple, what year is it? It feels like it's a completely different time. What are they doing to address these issues, Will?
Yeah, that's great. Thanks everybody for tuning in. So as we've talked about all the buzzwords here with Mag 7 and Apple, they appear to be shifting from a very slow, insular AI strategy to something far more urgent and acquisitive. If you think about it, the whole world's focused on artificial intelligence while they've been working on Apple intelligence. It could kind of show you the problems they've had right there. So to solve that, they're reportedly trying to make a huge pivot, potentially acquiring Perplexity AI, which is an advanced AI search engine. They hope to supercharge Siri and maybe compete with ChatGPT. We've mentioned NVIDIA already. Apple signed a $1 billion deal with them to outfit AI data centers and are backing domestic supply chains with $500 million investment in rare earth minerals. So that's a lot right there, but we mentioned our competitors. So they're exploring deals with OpenAI and Anthropic, two private companies. Signaling they may abandon their in-house Apple intelligence in favor of actual artificial intelligence finally.
Wow. So a crucial part of this whole equation is the impact these issues have on investors, of course. Should we be concerned about Apple's ability to stop the rot, Will?
Yeah, so I think investors should watch this one pretty close. Apple still has all the right ingredients. They're one of the largest companies in the world. Number 3 is not a bad spot to be. Very iconic, loyal brand. Deep ecosystem, world-class hardware. I'm a huge fan personally with the MacBook and iPhone. I use them daily. The App Store remains one of the most powerful platforms in tech. But that said, the pace of innovation with AI feels slow to me, especially as their peers charge ahead. So there's a growing risk that Apple becomes the GE of big tech. Still dominant by size, but gradually losing its edge. To some, it could be looking like a value stock in growth clothing here. So that's the pros and the cons. There's a massive opportunity here for the bull camp, and the bear camp maybe seems that things could continue to get worse.
Yeah. Two sides to every coin, right? So, Clayton, bring us home. Is there a bright spot here? What should investors be watching for from Apple going forward?
Yeah, I mean, Tara, I think a lot of the bright spots are pretty much what Will just articulated. They have an iconic brand. Their ecosystem is massively ingrained with millions of users, not just nationwide, but globally. So they're not exactly going anywhere. They've got a fortress-like balance sheet. And the fact remains that they are constantly trying to innovate. They just have not found that new unlockable innovation that they have really been searching for. Obviously, they tried to build a self-driving car a couple of years ago, spending billions of dollars there. But ever since the iPhone kind of came out, all those years ago, they're kind of searching for that next best and greatest idea. But really, if I'm an investor, I'm holding Apple. The things I'm really watching for upcoming are going to be earnings. So they report on July 31st. We talk about that in our weekly Friday video, especially when earnings season comes up. So we'll make sure to keep everybody posted there. But really what I'm going to be paying attention to on that front is management commentary to kind of give more clarity as to what their ongoing AI strategy is, whether that's tack on acquisitions like Will mentioned with Perplexity, or how tariffs are going to be impacting their business operations. Earlier in Q1, they mentioned that they were going to see a $900 million kind of expense charge via tariffs impacting their business. Let's see if that kind of works its way out or if that's going to increase going forward, because obviously they are a globally dominant company. They've got integrated supply chains globally. So any kind of fluctuation in trade policy is really going to, detrimentally impact their business operations. So we'll want any clarity on that going forward as well.
Yeah, absolutely. Hey, they've got their hooks in me. It's right here, right next to me, right? So never more than 3 feet away for most people. Whether you're an Apple ride or die, or you're starting to question whether the shine is fading, we can say confidently that no single stock tells the whole story of your financial future. Thanks to Clayton and Will for analyzing the cracks and potential comebacks behind the Apple brand. From AI blunders to global growth slowdowns, there's a lot more going on than just a red line on a stock chart. If today's conversation sparked questions about your own investments, now is a great time to act. Reach out to our team for a complimentary, no pressure portfolio review. Scan that QR code or click the link in the show notes. You'll walk away with insight and clarity, because confidence doesn't come from headlines, it comes from having a plan. Until next time, remember to stay informed, stay invested, and as always, we'll be here to help you navigate the twists and turns of the market.